Hey everybody out there in Think Tank land, Brian here, one half of the Think Tank guys for another episode of our 52 Ways to Put Your Policy to Work project, hashtag 52 Ways project on Facebook and YouTube. I saw something come across my desk, and we talk about this all the time, you know, how important it is to understand your policy, how important it is to understand this asset. We're sharing with folks how you can use this asset strategically as a place for cash that you can leverage into other things and build your asset column and your net worth and have some certainty and dependability in your life and control something that can help you build your wealth consistently. And I get this email the other day, I'm going to show you in a second, from a bank offering this incredible interest rate from the bank, a whopping 1.75. And I'm just going to kind of rip this apart with you a little bit. Listen, for a bank, that's a pretty powerful interest rate when most bank accounts are getting 0 or 0.1 or whatever. But we're going to take a look at that, and then we're going to compare it to what you have. Actually, I'll share with you one of my policies and what it's doing from a cash value standpoint, and then let you do the math for yourself. I'll guide you with that, but let you do the math for yourself, because once you understand this asset, you recognize that whole life cash values are an excellent place for cash. So let's dive in. Check this out. This was the email that I got, and I checked it out online and copied some stuff over. So the bank was basically saying, save smart and get more for your money. You know, this CIT Bank money market account offers a 1.75 right now annual percentage yield. So the effective interest rate on this money market account, where you can get up to hold on. I'll show you their numbers in a second. But it's just a great place because it's 1.75. We're going to come back to this in a second here. They want to show you that, wow, for your X amount of dollars, and this was pretty cool because there was a slider on the website. This is pretty cool. It shows that, at a normal bank, if you had $20,000 in cash sitting in the bank, you'd get, a whopping 0.1% or $20 a year of interest. And then, at these other banks, they're saying, Ally offers you a 0.9. So on that $20,000, you can make $180, and Synchrony offers you 1.05, and Discover offers you 1.35. But here at CIT Bank, listen, for a bank account, that's a strong number, right? And they are effectively saying they're over 11 times the national average. 11 times the national average. And I guess if you say the national average, as you can see, they're offering, well, let me put this over here, 1.75, right? What's 1.75 divided by 0.1? Well, it's over 11 times, right? The national average, that's what they're saying. So let's kind of take a look at this a little bit. The challenge that we have, and this is a good account, you'll get a 1099 for this at the end of the year, but for a bank account, 1.75 is pretty strong. But one of the things they offer, I don't know if you caught this, they offer this because they want you to let that money sit. You only can transfer or move money 6 times in a month. Now, you may not be moving money that quickly from your bank account. This could just be your emergency savings and whatnot. But if you dig into some of the details, you can see that number 2, the account is limited to a total of 6 pre-authorized or automatic transfers or withdrawals, electronic banking transfers between other accounts, withdrawals by draft, point-of-sale debits, debit card, or similar order per statement cycle period. 6. An excess activity fee will be charged each time the transaction limits are exceeded. Please refer to our fee schedule and our consumer products and fees. Remember, this is one of the places that banks make money. It's not just interest, but it's also on fees applicable to your account. Hey, but in the grander scheme of things, if you have money just wanting to sit still, you can do 1.75. Well, remember, I was mentioning to you that we're going to talk about the comparison of whole life cash values to a bank account here, as whole life being an excellent place for cash. Let's take a look at one of my personal policies. I just wanted to show you this so you know that it's a policy that's in force, it's in effect, and it's working. Most insurance companies will break down at the end of a policy year kind of the way that the policy is working and show you dividends and show you how the policy has grown. What I want you to look at here is that in the course of 365 days, so the beginning of a policy year to the end of a policy year, and the contribution into this account was made at the beginning of the policy year. So I want to be crystal clear here. There was no further contributions made into this account after March 19th, technically 2016, because then this was the cash value on March 20th. So the cash value here, $20,879, grew with guaranteed interest and then a dividend at the end of the year it grew to $21,964.58. In a course of a year, that was $1,085. Now, this is not because of the market. This is not because of the S&P. This is not because of anything like that. This is guaranteed interest and dividends. So what I want you to see also is that across the course of a year, that $20,879.54, so this calculator just rounded it up, and the $21,964.58, calculator just rounded it up over the course of 1 year, is a 5.2% increase. So you hear Eric and I talking all the time about 4 to 4.5, 4 to 5 plus interest that we earn on our cash values. I wanted you to see for yourself in a policy that's live, that's a couple years old, what it's actually doing from a cash value standpoint. And if I go back to, if you see that 5.2, the 1,085, if I go back to that screen where, this bank was saying, we're blowing away the rest of these folks. Well, look at what the policy is doing. There's not even enough room on this slide to show what the policy is earning, 1,085 over the 350. That the policy is doing when you compare it to a bank. And oh, by the way, we're not limited to 6 transactions. And oh, by the way, we're not going to be taxed on this 1,085 where this person's going to get taxed down here. So ladies and gentlemen, with a real quick overview here, I wanted to help you understand and see that the policies, and this is for our clients that have them and the clients that want them and your family members that should know about this. This is one of the reasons why we use whole life insurance cash values, because they're an excellent place for cash. So here's to your prosperity. Catch up with you next time.